I want to show you guys some charting that I did by hand. I love charting. Charting is what I do. Charting is what I do the best. I've looked at about around, I don't know, a million charts, probably more. And that's when I started to see repetitive stuff or patterns. Look, I don't know if I want to share this with you, to be honest. Because I worked so hard to understand this and I don't want to give it away. I don't know. Okay, let's go. I'm gonna share with you guys a very powerful tool. It's a simple tool, but it's very powerful. Do you know how to draw a line? It's uh, it's so easy. You connect 2 points. You connect 2 points. Can you connect 2 points? A kid can do that. A 6-year-old kid can do that. That's the first thing they learn in school, even before writing. Okay? Look at this. Point one connected with point two. Boom, it gives you this point three here. Boom. Okay. Point one, point two. It gave you this one here. Point three. Boom. It gave a small reaction here. Boom. And then breakdown. Okay. Point one, point two. Boom. Point three. Point one, point two. Boom. Three. Four. One, two. Boom. Three. Gave this reaction. Now, see how it is tightening. See how the volatility is contracting. Boom, breakout. And we have bases, base and break, base and break, base and break. And we have, you know what this is? Uh, no, this is not a parabolic wedge. This is a ledge, base and break. It tried to continue as it did here and here and here. Tried to break out and continue, but this one failed. That's a failure, breakout failure. Okay. And then the rally, look, it rallied, but the rally is weak. It's weak now. It's a bear flag. Look at the angle. We don't want this. We want something like this. Why? Because it squeezes late buyers. Same here. But here they start feeling bad, they exit, and then it goes up without them. Okay, here this is a bear flag. Break down. And it's also a double top. Look, up, down, up, down. And you have a collision here. You have multiple reasons to enter here. We have a bear flag, we have a double top, we have a breakout failure, then it failed again here with this bar. Try to break up, bad close, large big tail. Then same thing here. It broke, but boom, reversed. So we have a wedge. One, two, three. Boom, breakdown. This is a proper short point. Very low risk entry. And then this stuff continues in the it reverse and boom, base, break, bear flag. Here we have bull flags. Here now we have bear flags. Boom, and then this is even another bear flag. Up, one, two, three, one, two, three. Another one. 1, 2, boom, it gave you the 0.3 here. Don't expect that it will be always perfect, okay? Don't be a fool. 1, 2, boom. That's a wedge pull flag. You can see there is a trend line here. It's not drawn, but it is. It is here. Okay. Same. 1, 2, boom, 3, boom. This is overbought condition without any indicator, without looking at this. This is true overbought condition. When you run a marathon, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bars that are bullish, that are, when you run, yeah, 10 bull bars into resistance, extended. When you run a marathon, and then you sprint when you have the last 100 meters, you give all you have. Can you go run another marathon again? This is what happened. Boom, you you are exhausted. You just you just fall like this. Look, now now the selling came like crazy. Look at the bear bars, how big they are. This is a give up bar. This one is a give up bar. When these bulls, these ones, those are bought here, and they just can't handle the loss. They just are losing, and it's hurting them. Boom, boom, boom. Now it's always in short condition. You just sell for any reason. Okay. And same tool. 1, 2, boom, it gave you 3. I'm just gonna go through them now very fast. Okay. I just wanted to see. You can do it on a charting software like TradingView, but definitely charting by hand give you a feel. You start seeing something that you can't if you do it in a software. Breakdown, leg 1, pullback, leg 2, ABC, pullback, boom, bear continuation. And it's also a head and shoulder stop. You see, this is the left shoulder. This is the head double top. Look, up, down, up, down. This is a double top. And then the right shoulder, bang. Here, look at these bars. They are called, in technical analysis, candlestick stuff, they are called tweezer top. It's when two bars of the same distance, but doesn't care what they are called. It's this one is like a doji. Let's say this is a 15-minute bars. If we go into the 30 minutes, it's a doji closing at its low. Open here, goes up, goes down, and closes here, right? So when you start doing that stuff, that charting, uh, when you look at a chart like this, let's say it's a 15 a minute, you know what the higher time frame looks like and what the lower time frame looks like. What's this? This is a trading range. This is a trending market. This is a ranging market. We don't trade them this. We don't trade them the same. One is um, this one is a buy low, sell high. You sell here, you buy something around here. If you have a setup, this one you don't buy low, you sell low. Look, breakdown of this support. Boom, sell, sell, sell. There is no support in bear trends. Bear trends bear trends break support like it's not existent. Uptrend. Same here. You see the 1, 2, boom. It gave you the 0.3 here. But it didn't give a strong reaction, so beware. Boom, break. Maybe this is a shakeout. Look, it looked like, the trend is no longer continuing. Boom, and then people start shorting maybe here. Not maybe, definitely started shorting here. Or the longs got shaken out of their longs. Boom. And now the market goes and leaves them behind. That could be a buy just right here and stop just here. Just here, the trend line. Because it's an invisible support. Look here, 1, 2, 3, 4. You see this a simple tool. You just find two pivot points, 1 and 2, draw the trend line, and point 3 is the signal. Up, down, up, leg 1, pull back leg 2, around the same distance. If you measure from here to here or from here to here, and it's the same distance. Leg 1, pull back leg 2, it's an ABC pull flag, back test of support, gap fill. That's a very really valid entry point. You have a signal, an inside bar. Look, the range of this bar is inside here. The high of this is below the high of this one, and the low it's included. It's inside. You buy the break of the inside bar here. You can stop out here, here, or here. Depends how tight you wanna be, how do you manage your trades. And then gives then it gives a double bottom pull flag. Boom. Leg 1 pull back, leg 2, ABC pull back, continuation. And then look, left shoulder, head, right shoulder, bang. Oh, this one is really beautiful. This one, the complete cycle is here. We have the stage 1 consolidation, neglect, then starts the breakout, accumulation, up, 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 base, up, base, up, base, up, base, up. Now see how volatile it became here comparing to here. Here the bars are small, they are tight. Here they are starting to get wider. Boom, here comes the distribution. Here comes the selling. Here comes the engulfing bars. You can draw a trend line from here, this point and this point. Boom, it gives you this area here. This one, I wrote here I triangle or lower time frame. Where do I see? Yeah, the C here. Where is the I? Yes, on lower time frame. Yeah. Here we have an inside bar, then inside bar inside the inside bar, which is a VCP. It's a characteristic of a VCP. It's a volatility contraction. Boom. That gives this. Boom. Look where it stopped. Then up, made the. What's this? Big down, big up, and handle. This is a cup with handle. A cup with handle. Boom. Look the breakout. What it gave. Breakout gave a really good move. Buy the close. Buy the close. You just buy here for any reason. Look here. Also we have an inside bar. The tightening. This is also a characteristic of AVCP. Big down, big up, and contracting. So people who bought here, who short, who bought here. Sorry, people who sold here, they sell, and price gets back to the point where they sell, and they are no longer selling because they are disappointed. Boom. Same here. Point two, point one, point two. Boom. It gave you a short. It gave you a signal that could be a short here. Yeah. You add to that double top. You add to that uh, head and shoulders. Look, this is a double top left shoulder. This is the double top head, and nested head and shoulders. There is a head and shoulder in the head and shoulders. The right shoulder is itself a head and shoulders top. Boom. Do I really need to say something? Just this trend line. Just this trend line. 1, 2 gives you the point 3 here and the point 4 here. One simple tool. This one was the market top Dow Jones 1990. This was a study on price and volume. You can see here, this is a day of distribution. It attempted to move up, but sold off and closed low. Institutions selling, getting out. Okay? Okay. Now, it tries to break out, and then look, this day is a day of big volume. So there's a lot of buying here, a lot of volume, a lot of exchange, buying and selling. But the close is bad. What does that mean? This is a day of churning action. Institutions that distributed here, now they see a lot of weak hands, a lot of retail buying. So they just give them all they want. They are buying, just give them everything they want. So it's like there is a level, they want to buy 50, 100, 50, 50, 50, 100 shares, give them. Just sell them, sell them, sell them. So this breakout was maybe created by retail traders, by weekend, but they can't sustain it. So guess what happens? Another day of distribution. Boom, back to the range. And this is a left shoulder double top, a head. Look, this is the head. Boom, breakdown. And this is the right shoulder. And then bang, done. Okay? This is charting. I hope you enjoyed it. I hope that you got something from it. Just look at this. 1, 2, boom, 3, 4. 1, 2, boom, 3. There are a lot of people who would say, oh, this is easy, this is blah, blah, blah. But the trades that they are taking suck. Yeah, this is easy, but it can give you powerful signals. But don't use that. You know, I'm giving you fire here. It's like I'm giving you something dangerous that can burn you. So don't believe me. Don't believe anything that I say. Just go verify it for yourself. Just do this work that I did. If you are not willing to do it, good night.